Morning, friends. Now I am going to explain a live example of a bottom reversal. This example is from 27th July 2026. In the morning, before the market opens, you can observe that both volume and OI change are zero because the market has not started yet. Once the market opens, the system starts updating the volume and OI change values in real time. Now let's observe the data. We can clearly see that a strong resistance is formed at 24,000, where both the volume and OI are at 100%. On the put side, the strongest put OI is at 23,800. At the same time, we can also observe that call OI change positions are being closed at 23,800 and below. This gives us a bullish indication from 23,800 to 24,000. At this moment, the market is trading around 23,930. As we continue observing the data, we notice that the resistance is shifting downward. You can find it by checking call OI percent at 24,100. Call OI percent is decreasing, and 23,950 call OI percent is increasing, while the support is shifting upward from 23,800 to 23,900. In other words, the support is moving higher and the resistance is moving lower. After some time, a strong support is formed at 23,900, while 24,000 continues to remain the strong resistance. At 23,900 we have 100% volume, 100% OI, strong OI change. This indicates that a bottom reversal can take place from 23,900. However, we should not enter the trade immediately. To take both top reversal and bottom reversal entries, we must first wait for a liquidity sweep and the formation of the day low. At this stage, the market has not yet made the day low, so we continue waiting. Once the market reaches 23,900 and forms the day low, it becomes the right time to look for a bottom reversal entry. Let me revise the bottom reversal conditions once again. We need a strong support with 100% volume, 100% OI, strong OI change with 100%. Ideally, the call OI change should be greater than the put OI change. Wait until all these conditions are satisfied before taking the trade. Now at one point, you may notice that the call OI change becomes higher than the put OI change. Let me revise the bottom reversal conditions once again. We need a strong support with 100% volume, 100% OI, strong OI change with 100%. Ideally, the call OI change should be greater than the put OI change. Wait until all these conditions are satisfied before taking the trade. Now at one point, you may notice that the call OI change becomes higher than the put OI change. Even though the call OI values appear larger, we need to understand the reason behind them. The maximum call OI is still at 24,000. The call positions that shifted down to lower strikes are newly built positions, and these are mostly created by retail traders. Retail traders generally cannot break the strong support created by institutional or big players. Still, 23,900 has not become weak. It means put positions are not closing. The support at 23,900 has already been built over the previous two trading sessions. Therefore, even though the market is moving downward, those new retail call positions are not strong enough to break this support. For example, at 10:40 a.m. the data may show call OI equals 153 million, put OI equals 136 million. Although the call OI is slightly higher, it is only around 75%, whereas the support at 23,900 still has 100% strength. This tells us that the newly created call positions are relatively weak. The strongest call OI still remains at 24,000, and the downward movement is mainly caused by newly built retail positions. These retail positions cannot easily break the strong institutional support at 23,900. Therefore, once the price reaches the day low and performs a liquidity sweep, you can take a call buy entry from the 23,900 support level. After identifying the liquidity zone, wait for the liquidity to be swept, then enter the trade on the high of the liquidity candle. Your stop loss should be placed below the low of the liquidity candle, and it should also remain below the 23,900 support level. This is because 23,900 is the strong support in this bottom reversal setup, and once the reversal begins, the price should ideally not move below that level again. This is how a bottom reversal setup is identified and traded using option chain data. Now let's discuss another live example of a bottom reversal, which occurred on 24th July 2026. Before the market opens, both volume and OI change are zero because the market has not started yet. Once the market opens, the volume and OI change values begin updating in real time. Initially, the strongest put OI is at 23,500, while the strongest call OI is at 24,000. As the market progresses, we can observe that the put writers start shifting upward. Their positions move from 23,500 to 23,700, while the strongest call OI continues to remain at 24,000. At the same time, we can also see put positions being closed from 23,800 and above. It means seller's controller is above 23,800, and a strong support is formed at 23,700. We have 100% volume, 100% OI, strong OI chain. At this stage, we can plan for a bottom reversal if the price reaches the day low near 23,700. Additionally, we have the strong resistance is still far away at 24,000, and we also have counter positions that support a possible bottom reversal. Let's analyze the data. So we should wait. Do not rush to enter the trade. Instead, wait for a liquidity sweep. Call writers are continuously shifting down, so we should wait till bottom reversal conditions are met. However, after some time, the price breaks below 23,700. This means that the strong support at 23,700 has been broken, and at the same time, the resistance also shifts downward. Now 23,700 becomes a strong resistance, which is a clear bearish signal. We can also observe that put positions continue to close. At this point, the market is no longer in a bottom reversal setup. Instead, it has entered a continuous sell entry setup. Why? Because the strong support at 23,700 has already been broken. Therefore, if the price retraces towards 23,700 and forms a supply zone, we can look for a continuous sell entry from that area. Since the resistance has shifted downward, 23,700 is now completely under the control of sellers. So until a new strong support is formed, the market continues to favor selling opportunities rather than bottom reversal entries. Now, if we want a bottom reversal to occur, we need a new strong support at the day low. The conditions are strong volume, strong OI change on the put side. On the call side, only OI change should be relatively high. Now let's observe 23,600. At this level, the put side has around 85% strength in volume, OI and OI change, while the call side has a higher OI change. This suggests that 23,600 has the potential to become a bottom reversal support. However, the put side is not yet showing 100% confirmation. Therefore, we should wait patiently until all the bottom reversal conditions are fully satisfied. Now at around 10:45 a.m., 23,600 becomes a strong support with 100% volume, 100% OI, 100% OI change. On the other side, the call OI change is greater than UT OI change, but it represents only 49% strength. The strongest resistance is still present at 23,700. This gives us confidence that 23,600 can act as a strong bottom reversal support. The data clearly shows that the put writers have shifted their strongest support from 23,500 to 23,600, making 23,600 the new institutional support level. To enter the trade, we should wait for a proper entry confirmation. You can use any one of the following entry methods. Day low liquidity sweep preferred method. To enter the trade, we should wait for a proper entry confirmation. You can use any one of the following entry methods. Day low liquidity sweep preferred method. Scoop entry single candle order block. Retest entry. Whichever method you choose, the entry should be taken as close as possible to the 23,600 support level, because that is where all the bottom reversal conditions are satisfied. Once the reversal starts from 23,600, the next major resistance is at 23,700, giving approximately 100 points of upside potential. This is an excellent example of a bottom reversal, where the support shifts upward, all confirmation conditions are satisfied, and the trade offers a favorable risk-to-reward opportunity. Now let's discuss another live example of a bottom reversal, which occurred on 22nd July 2026. Before the market opens, both volume and OI change are zero because the market has not started yet. Once the market opens, the data begins updating in real time. Initially, we can observe that the strongest call OI is at 24,200, while the strongest put OI is at 24,000. This means 24,200 is acting as the major resistance, and 24,000 is acting as the major support. As the market progresses, we notice that the resistance starts shifting downward from 24,200 to 24,100, while the support starts shifting upward from 24,000 to 24,100. At this stage, our objective is to determine whether the market is likely to form a top reversal or a bottom reversal. Let's analyze the data. So we should wait. Do not rush to enter the trade. Instead, wait for a liquidity sweep. Call writers are continuously shifting down, so we should wait till bottom reversal conditions are met. If the price reaches 24,000, we need to check whether all the bottom reversal conditions are satisfied. Let's examine the data. At 24,000 we have 100% put volume, 100% put OI, strong put OI change. On the call side, the call OI change is greater than the put OI change. This means that 24,000 qualifies as a strong bottom reversal support. All the bottom reversal conditions are satisfied because 24,000 has 100% volume, 100% put OI, 100% put OI change. The call OI change is greater than the put OI change. Since the call OI change is higher, but percent is low compared to put percent, main resistance is 24,200, where you have 100% call OI, and it acts as a counter position, creating an opportunity for a stop-loss hunt before the market moves upward. This tells us that 24,000 is a strong institutional support level, where large market participants are holding significant positions. Although all the bottom reversal conditions are satisfied, we should not enter immediately. The preferred confirmation is a liquidity sweep candle. Once the liquidity sweep is complete, we can take the entry. If we miss the liquidity sweep entry, we still have two alternative entry methods. Single candle order block entry. Retest entry. Although the call writers are shifting their positions downward, those new positions are not strong enough to break the institutional support at 24,000. Notice that 24,000 continues to hold as a strong support. It is not shifting lower, even though new call positions are being created around that level. These newly created call positions are mainly retail trader positions, whereas the strongest institutional resistance still remains at 24,200. The support at 24,000 has already been built over the previous two trading sessions. Because of this, the newly created retail positions are unlikely to break the institutional buying support. Therefore, we can expect a bottom reversal from the 24,000 support level. For the trade execution, wait for any one of the following confirmations. Liquidity sweep entry preferred. Single candle order block entry. Retest entry. Once one of these confirmations appears near 24,000, you can confidently take the bottom reversal trade. Suppose our bottom reversal entry has already been triggered, but after the entry, we observe that call writers continue to build heavy positions at the same strike level. In this situation, we should become cautious. Instead of expecting a large upward move, it is better to book profits or exit the trade at the nearest resistance level. Let's examine the data. Initially, 24,000 was acting as a strong support. However, after our entry, the call writers shifted their positions downward and started building heavy open interest at 24,000. As a result, 24,000 has now become a strong resistance as well. This means that both the strongest support and the strongest resistance are located at the same strike price. When both buyers and sellers build significant positions at the same level, it indicates that the market is entering a consolidation phase. In such conditions, the market usually lacks clear direction, resulting in sideways movement and reducing the probability of a successful trend. Therefore, if you are already in the trade, consider exiting at the nearest resistance instead of waiting for a larger target. If you have not yet entered the trade, it is better to avoid taking a new position, as the market no longer offers a high probability bottom reversal setup. Now let's look at another live example of a bottom reversal, which occurred on 24 June 2026. Before the market opens, both volume and OI change are zero because the market has not started yet. Once the market opens, the data begins updating in real time. Initially, we can observe that the strongest put OI is at 23,500, while the strongest call OI is at 24,000. As the market progresses, the support starts shifting upward from 23,500 to 23,800, while the strongest resistance continues to remain at 24,000. Although the main resistance does not shift, we can observe counter positions appearing at 23,800. At this stage, we can clearly identify 23,800 as a strong support because it has 100% volume, 100% put OI, 100% put OI chain. However, on the call side, the OI change is not yet strong enough. Therefore, we should wait until all the bottom reversal conditions are fully confirmed. At this point, the market is trading around 23,850, and 23,800 continues to hold as strong support. As the market moves, the support even starts shifting higher from 23,800 to 23,900. Since we did not get an entry at 23,800 initially, we should patiently wait for a pullback. Eventually, the price retraces back to 23,800. Now the bottom reversal conditions are clearly satisfied. At 23,800 we have 100% volume, 100% put OI, 100% put OI chain. On the call side, the call OI change is 41 million, while the put OI change is 48 million. The counter positions are almost equal, indicating a balanced setup that supports a potential reversal. This creates a perfect bottom reversal setup. The 23,800 level now acts as a strong institutional support, where large players and institutional traders are holding their positions. To execute the trade, we should wait for confirmation using any one of the following entry methods. Day low liquidity sweep preferred method. Single candle order block entry. Retest entry. Once one of these confirmations appears near 23,800, we can confidently enter the bottom reversal trade. In this example, 23,800 acts as the bottom reversal level and a strong support zone. Since institutional traders are holding significant positions at this level, the probability of an upward reversal is much higher. This is another excellent example of identifying and trading a bottom reversal using option chain analysis. Now let us discuss a bottom reversal entry setup using a live example from 16th June 2026. Before the market opens, both volume and OI change are zero because the market has not started yet. Once the market opens, the data begins updating in real time. Initially, we can observe a strong support at 23,900, where put volume equals 100%, put OI equals 100%, put OI change equals 100%. On the opposite side, at 23,900, the call option shows counter positions with increasing volume and OI change, while the maximum call OI is still present at 24,000. This means a 23,900 acts as a strong support. 24,000 acts as the major resistance. For a valid bottom reversal setup, we prefer the call OI change to be greater than the put OI change. At this stage, however, this condition has not yet been satisfied. Therefore, we should wait patiently for the market to reach the day low and form a liquidity sweep. During the liquidity sweep, we may observe the call OI change becoming greater than the put OI change, which provides additional confirmation for the bottom reversal setup. Throughout this period, 23,900 continues to hold as a strong support. Although the call writers are shifting their positions downward from 24,000 towards 23,900, there is still no weakness in the 23,900 support level. In other words, the sellers are trying to shift their positions lower, but 23,900 remains firmly under the control of institutional buyers. At this point, we can prepare for a bottom reversal entry around 23,900. The preferred entry methods are liquidity sweep entry, most preferred, single candle order block entry, retest entry. As the call writers continue shifting downward, the call side may eventually show around 100% volume, 86% OI, 85% OI chain. Even then, the put side still maintains 100% volume, 100% OI, 100% OI change. This clearly indicates that 23,900 remains the stronger level. The newly created call positions are mostly retail trader positions, while the strong put support at 23,900 has been built by institutional participants. These newly created retail positions are generally not strong enough to break such a well-established institutional support. Therefore, 23,900 continues to act as a strong bottom reversal support, and we can confidently plan our trade using the liquidity sweep concept. The liquidity sweep entry should always be given the highest priority because it provides stronger confirmation of the reversal. Once the market starts moving upward, the call writers begin exiting their positions. As these call positions unwind, the strongest resistance shifts back to 24,000, restoring it as the primary resistance level. This is an excellent example of a bottom reversal entry setup, where institutional support at 23,900 remains intact despite increasing counter positions from the call side, ultimately leading to a high probability reversal.